The trade relationship between the United States and China, the world's two largest economies, has been a linchpin of global commerce, driving economic growth and shaping international markets. However, under President Donald Trump's administration, this relationship has been strained by a trade war marked by escalating tariffs and retaliatory measures. As of May 11, 2025, the U.S. has imposed tariffs as high as 145% on certain Chinese imports, while China has countered with 125% tariffs on U.S. goods. These actions have disrupted global supply chains, increased consumer prices, and heightened fears of a global economic slowdown. The recent trade talks in Geneva on May 10 to 11, 2025, represent a critical moment, with both sides reporting substantial progress, but withholding specific details until May 12, 2025. This article examines the context of these talks, their potential economic impacts, and the broader implications for global markets and investors. Latest developments. On May 10 to 11, 2025, senior U.S. and Chinese officials convened in Geneva for their first formal trade talks since President Trump escalated tariffs on Chinese imports in April 2025. The U.S. delegation, led by Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer, met with China's Vice Premier He Lifeng, a key figure in economic policy. The talks were described as constructive by both parties, with Bessent noting that substantial progress had been achieved, though he refrained from disclosing specifics. He Lifeng echoed this sentiment, calling the discussions an important first step toward resolving differences. President Trump, in an X post, described the meeting as very good and conducted in a friendly but constructive manner, claiming that much agreed to and that the talks represented a total reset in U.S.-China trade relations, the New York Times. However, no concrete agreements were announced, and the White House indicated that further details would be provided on May 12, 2025. The talks followed weeks of heightened tensions, with the U.S. imposing reciprocal tariffs on April 9, 2025, raising duties to 84% on certain Chinese goods, and China retaliating with 125% tariffs on U.S. products, the White House. The Geneva meeting was prompted by growing economic pressures on both sides. China's exports to the U.S. dropped 21% in April 2025, while U.S. imports from China are projected to fall by $740 billion in 2025, or 22%, Tax Foundation. The talks signal a potential shift toward de-escalation, though both nations remain cautious amid deep-seated geopolitical and economic rivalries. Analysis. The U.S.-China trade war has had profound economic consequences affecting businesses, consumers, and global markets. Below is a detailed analysis of its impacts, supported by data, financial metrics, and expert perspectives. Economic impact on the U.S. Tariff revenue. The U.S. tariffs on China are expected to generate significant revenue, with the Tax Foundation estimating $1.2 trillion over the next decade, from the April 2025 reciprocal tariffs alone. The average effective tariff rate on all U.S. imports has risen to 11.1%, the highest since 1943, reflecting the scale of these measures. Decline in imports. The high tariffs have drastically reduced U.S. imports from China. The Tax Foundation projects a $740 billion, or 22%, drop in imports in 2025, affecting sectors like electronics, furniture, and apparel. Companies such as Amazon, Home Depot, and IKEA have been directly impacted, with Chinese goods arriving at U.S. ports facing 145% tariffs, CNBC. Consumer prices. Tariffs have driven up prices for American consumers, particularly for goods like refrigerators, clothing, and furniture. The IMF estimates that U.S. consumer prices will grow by 3% in 2025, a full percentage point higher than previous forecasts, largely due to tariff-related costs, World Economic Forum. Job losses and gains. While tariffs aim to protect U.S. jobs, they may also lead to job losses in industries reliant on Chinese imports, such as retail and manufacturing. Conversely, domestic industries like steel have benefited from reduced competition, though the net economic impact remains debated. Economic impact on China. Export decline. China's exports to the U.S. have plummeted, with a 21% drop reported in April 2025, despite an 8.1% overall export increase to other regions like Southeast Asia, CNBC. The U.S. remains a critical market, and this decline has strained China's economy. Economic growth. The trade war has slowed China's economic growth, with analysts downgrading 2025 forecasts. Nomura has warned that the trade war could cost China up to 16 million jobs, prompting the central bank to implement monetary stimulus, including rate cuts and liquidity injections, Reuters. Retaliation measures. China has imposed 125% tariffs on U.S. goods and targeted U.S. services, such as travel and consulting, to broaden the trade conflict. Additionally, China has restricted exports of strategic minerals like gallium and germanium, critical for semiconductors, in response to U.S. export controls, CNBC. Global economic implications. Supply chain disruptions. The trade war has disrupted global supply chains, forcing companies to seek alternative suppliers. This has increased costs and caused delays, particularly in technology and manufacturing sectors. Financial market volatility. Markets have been highly sensitive to trade developments. On May 2, 2025, the S&P 500 posted its longest winning streak since 2017, driven by hopes for trade talks, Investopedia. However, volatility persists, with stocks reacting sharply to tariff news. Recession fears. The IMF has raised the probability of a U.S. recession to 40%, up from 25%, citing tariff-related risks. Global growth forecasts have been revised downward, with the U.S. growth forecast for 2025 cut to 1.8% from 2.7%, World Economic Forum. Expert perspectives. Analysts offer varied perspectives on the trade talks. Optimism for de-escalation. Some experts, like Stephen Olson from the Institute of Southeast Asian Studies, see the talks as a chance for a partial tariff rollback, noting China's leverage in strategic minerals, CNBC. President Trump has suggested lowering tariffs to 80%, a potential olive branch. Skepticism on comprehensive deals. Others, including Wendy Cutler from the Asia Society Policy Institute, argue that a comprehensive deal is unlikely due to issues like national security and intellectual property rights, CNBC. Market implications. Investors are cautiously optimistic, with markets likely to rally on signs of de-escalation. However, sustained gains depend on concrete agreements and reduced uncertainty. Future outlook. The outcome of the U.S.-China trade talks on May 11, 2025, is a pivotal moment for the global economy. Key developments to monitor include May 12th announcement. The White House has promised more details on May 12, 2025, which could clarify whether tariffs will be reduced or other agreements reached. This announcement will likely influence market sentiment and business planning. Further negotiations. Successful talks could lead to additional rounds of negotiations to address deeper issues, such as market access and technology transfers. However, failure to reach meaningful agreements could escalate the trade war, further disrupting trade flows. Geopolitical context. The trade war is part of a broader U.S.-China rivalry, encompassing technology, national security, and global influence. Even if trade tensions ease, underlying geopolitical challenges may persist, affecting long-term economic stability. For investors, the uncertainty warrants a cautious approach. Companies with significant exposure to Chinese imports, like Amazon and Home Depot, face ongoing risks, while domestic industries may benefit from reduced competition. Monitoring economic indicators, such as consumer prices and trade balances, will be crucial in assessing the talks' impact. Conclusion. The U.S.-China trade talks in Geneva on May 10 to 11, 2025, offer a glimmer of hope for de-escalating a trade war that has disrupted global markets and raised recession fears. While both sides have reported substantial progress, the lack of specific details keeps the world in suspense, with a critical announcement expected on May 12, 2025. The trade war's economic toll, higher consumer prices, reduced trade, and supply chain disruptions, underscores the urgency of finding a resolution. However, deep-seated issues like national security and market access suggest that a comprehensive deal remains elusive. As the global economy hangs in the balance, the outcome of these talks will shape the trajectory of trade, investment, and growth for years to come. Investors and policymakers alike must remain vigilant, prepared for both opportunities and challenges in this high-stakes economic drama.